Bismillahirrahmanirrahim. In the previous class, we discussed about audit report, that what is audit report. Today, we are going to discuss about types of audit reports. Following are the major types of audit reports. These are 4 different types of audit report. First one is unqualified opinion. The second one is qualified opinion. The third one is adverse opinion. And the last one is disclaimer of opinion. So we will discuss these one by one. The first one is unqualified opinion. It is often called a clean opinion. Clean opinion means each and everything is fine. An unqualified opinion is an audit report that is issued when auditor determines that each of the financial records provided by small business is free of any misrepresentations. Means that there is no error and no fraud in the financial statements of the company. Secondly, in addition, an unqualified opinion indicates that the financial records have been maintained in accordance with the standards, that is, either they are following GAAP or they are following IFRS. GAAP is followed in USA and the neighboring countries, and IFRS, it is followed in the UK. So, in unqualified opinion, 2 things are very important. The first thing is that in the financial statement, there is no error. And the second thing is no fraud. The second point in a clean opinion is that they followed the principles. When they are presenting their financial statements, they either followed the GAAP or they either followed IFRS, International Financial Reporting Standards. I told you GAAP is followed in United States and IFRS is followed in UK. So this report is the best report that a company can receive. The second type of audit report, it is called qualified opinion. In situation when a company's financial records have not been maintained in accordance with GAAP, IFRS, but no misrepresentations are identified, an auditor will issue a qualified opinion. Now, in the second, this thing is true. This thing is fine, but there is problem in this thing. They didn't follow the GAAP or IFRS. So they will give a qualified opinion. So see here, in situation when a company's financial records have not been maintained in accordance with GAAP or IFRS, but no misrepresentations are identified, means there are no misrepresentations, means there are no errors, no fraud, but they didn't follow the GAAP or IFRS. So we call this opinion an qualified opinion. The writing of a qualified opinion is extremely similar to that of an unqualified opinion. A qualified opinion, however, will include an additional paragraph. And what will be that paragraph? That highlights the reason why the audit report is not qualified. And in this paragraph, they will add that they didn't follow the GAAP or IFRS in presenting their financial statements. So this type of opinion is called qualified opinion. Now the third type of opinion, it is called adverse opinion. Adverse means the bad opinion. The worst type of audit report that can be issued to business is an adverse opinion. Now in this adverse opinion, this indicates that the firm's financial records do not conform to GAAP and IFRS, the first thing, that they didn't follow the GAAP or IFRS. The second, in addition, the financial records provided by the business have been grossly misrepresented, and there are a lot of misrepresentations in the financial records. Means both the points, these are not good. Means this thing is not good. There are errors and there are frauds. Means there is misrepresentation, and they also didn't follow the GAAP and IFRS. So this type of opinion is called adverse opinion. Although this may occur by error, maybe there will be errors, there will be mistakes, or it is often an indication of fraud, or maybe there is possibility that there is fraud in the financial statements, in the financial record. When this type of report is issued to a company must correct its financial statements. Now, if this report is coming, adverse opinion is coming, what will the company do? They will correct its financial statements, and then what will happen? And have it re-audited. Then auditor will again come and he will re-audit the financial statements, as investors, lenders, and other requesting parties will generally not accept it, because if there is adverse opinion, nobody will accept it. Neither the investors will accept this report, they will not invest money, they will withdraw their money. Lenders, they will not give you loans, and other requesting party, any party who is interested in the financial statements of the company, they will not accept the adverse opinion. So company must correct these mistakes, these frauds, these they will follow the GAAP and IFRS, and then their financial statements will be re-audited, and after re-auditing, then auditor will again give his opinion, because adverse opinion is not accepted to the investors, to the lenders, and other requesting parties. And the last type of opinion, this is called disclaimer of opinion. What does it mean? On some occasion, an auditor is unable to complete an accurate audit report. Auditor is unable to give his opinion. There will be some reason behind this. This may occur for a variety of reasons, such as absence of appropriate financial records. Means the financial records of the company, there is possibility that these financial records are not complete. So it is very difficult for auditor, if the record is not complete, to give his opinion. When this happens, the auditor issues a disclaimer of opinion. What does it mean, disclaimer of opinion? Stating that an opinion of the firm's financial status could not be determined, that it is impossible to determine, to give an opinion on the financial status of this company, because the financial records are not complete. So because of incomplete financial records, it will be impossible for auditor to give an opinion about the financial statements of the company. So we call it disclaimer of an opinion. Now, the contents of audit report. Which things will be included in the audit report? Following are the main contents of an audit report. The first one is the title. The second content is the body of the audit report. And the third component or content of an audit report is the closing. Now, the first content of audit report is the title. So, which things will be included in the title? Typically, an audit report consists of a title. The title of the audit report, or the title of the opinion, that includes the word independent. There must be this word independent. Independent means that this audit is done to illustrate that it was prepared by an unbiased third party. But who made this audit report? A third party who is unbiased. And the second thing that will be included will be the address of the company which has been audited by the independent auditor. So two things will be included in the title. The first thing is the independent auditor, the name of that auditor, that independent auditor, that this audit is done or this audit is conducted by an unbiased third party. And the second thing is the address of the company, address of the joint stock company which has been audited by the independent auditor. The title is followed by the main body, which consists of the following paragraph. I told you that in the title, two things will be included. One is the name of independent auditor, and the second thing is the name of the company which has been audited. The second thing is the body. The body will include the following four things. The first thing is introductory paragraph, the introduction of the report. Then the second thing is management responsibility, that what is the responsibility of management regarding the company. Then what is the auditor's responsibility? These things are, I told you that all audit reports, they have a format. So these things are included in the format. You have to follow the format. The first thing is introductory paragraph, that what is this? This is an audit report. In this audit report, we did this thing, we did that thing, whatever that is. Then there will be management responsibility. In audit report, they are mentioning this thing, that what is the responsibility of management. And then the third thing is what is the responsibility of auditor. So these are standard paragraphs. These standard paragraphs will be included in all audit reports. The main thing is this thing, the auditor's opinion, that what is his opinion, whether it is unqualified opinion, whether it is qualified opinion, whether it is adverse opinion, whether it is disclaimer of opinion. So this is the main thing in audit report. These things are, I told you, these things are standard. The introductory paragraph in audit report, then what is the management responsibility, what is auditor's responsibility. So these are standards, you will follow these standards. And then this thing is the main thing, the auditor's opinion. So these things will be included in the body of the report. The last thing in audit report is the closing of the audit report. Closing consists of auditor's signature and dates, including his address. Here, now what will auditors do? He will sign that report, and he will write the date on which this report was signed, and there will be his address, the address of the auditor. So in audit report, three main components. The first one is the title. In title, I told you two things will be included. The first thing is the independent auditor, and the second thing is the name of the company and its address which has been audited. Then there will be the body of the audit report. In the body, there will be introductory paragraph. Then there will be management responsibility. I told you these are standard paragraphs regarding the introduction of the report, the responsibility of the management, the responsibility of the auditor, and then this fourth thing is the opinion of auditor. Whether it is qualified opinion, unqualified opinion, adverse opinion, or disclaimer of opinion. And the third component of audit report is the signature and the date, including the address of the auditor. Then there are stages of auditing. What are the different stages of audit? Following are the stages of a typical external audit. The first one is the appointment of audit. This is the first stage in audit, that there will be an appointment letter. Then there will be an engagement letter. Engagement letter means from which date you can start the audit. One is the appointment, audit appointment, that you are appointed as an auditor. You will be informed with a letter that you will audit this company. Then there will be engagement letter. When you receive the appointment letter, you will inform the company that from this date I will come, so please close all your books of accounts. So I will come and I will audit your accounts. So that is the engagement letter. Then there will be the third step, that is initial planning. In this initial planning, knowledge of the business is important. This is which type of business, this is manufacturing business, this is service business, this is which type of business. Then the risk assessment. What is the risk assessment? Later on we will discuss about this. Then the internal control review procedures. I told you about internal controls in the previous class, so I am not going to go in detail of this thing. Then you will check the internal control of the company. Then control procedures, authorities. What are the control procedures? Who has authorities? Who will give approvals? Who will give segregation of duty? Means the assignment of duties. So here we are focusing on the control procedures, that who is controlling which thing, who has which type of authorities, who is giving the approvals for different things, and the segregation of duties, who is assigning the duties to different people. So this is the initial planning for an audit. Then preparation of the audit plan. Then we will make an audit plan, the auditor. Then accounting system review. Then we will check their accounting system. The auditor will check the accounting system of the company. Then there will be analytical review of techniques. Analytical review means, like suppose if you are making purchasing, So if you are making purchase, so for purchase there will be some standards developed, and auditor will check that whether these standards are followed or not. Like purchasing are according to the controls established. Like when you are purchasing something, so there will be some standards that someone will give the approval. So whether they followed the hierarchy, they take approvals from the top management or not. Similarly, in sale, there will be some standards. So in analytical review, they are checking whether they are following the standards that are established by the company or not. So in analytical review of techniques, when you are purchasing something, when you are selling something, so they are checking whether in purchasing, the standards are followed or not. Someone will give approval, someone will go, he will purchase that thing. So whether these standards are followed or not. Suppose I'm giving you an example. Suppose an employee came to the management that I need 1 month advance salary. So now what will management do? They will check whether in the rules and regulation this thing is written that we can give 1 month advance salary or not. If this is written, then they can give loan to the employee 1 month advance salary. But if not, then they can't give loan, or you can say advance salary to the employee. So they are checking this thing. So these are basically analytical review of techniques. Now suppose in purchasing, suppose you want to purchase, the company wants to purchase a building. So for purchasing a fixed asset of very high value, so there will be some rules and regulations that who will give approval, there will be a meeting or not. What will we do for approving the purchase of the building? So then after that, they will make a decision about the purchase. So auditor will check whether these standards are followed or not. Whether there is one manager and he did this thing on his behalf, or no, they discuss this thing in the meeting, and after the meeting, then they took a decision that we are going to purchase a building, or we are going to purchase a machinery, or we are going to purchase some other thing, some other important asset. So they are checking this thing, whether these analytical review, these are followed or not. Considering the ways in which audit evidence can be sought. Now here in this step, we will check that how we will obtain evidence. Evidence means, suppose if you are purchasing a land, so for purchase of land, there will be documents of the land and the transfer of ownership. So in this way, we will obtain an evidence of that land. Similarly, other things, purchase of inventory, purchase of furniture and these things. So there will be quotations and there will be other formalities. So whether these formalities are complete or not. So in this way, they will obtain evidences. Similarly, in purchasing, suppose shares of other companies or purchase of bonds, so there will be evidences. So they will check that how we will obtain the evidence regarding a transaction. So they will see Suppose if we purchase inventory, so we can go to the supplier and we can ask from him whether on this date the company purchased this inventory from you or not. We purchase a land, so we'll go to the owner. We can obtain evidence from that owner whether he sold this building or this land to this company or not. Substantive testing means transaction level procedure. They will check all the transactions one by one. I'm telling you, not all the transactions on sample base. So in the sample, if something is coming, so they will go and they will check that transaction. They will make sure about that transaction, whether that transaction is real or artificial. The next one is a review of the financial statements. Then they will check the financial statements, compliance with standards, material misstatements, etc. They will check whether the financial statements comply with the GAAP and international financial reporting standards, and whether there are material misstatements in the financial statements or not. And the last step is the preparation and signing of the report. In the last step, then they will prepare an audit report and they will sign it. So these are different steps in conducting an audit report, different stages in conducting an audit. So I think for today it is enough. Inshallah, in the next class, then we will talk about the objectives of audit. If you have some questions, so in the WhatsApp group, you can discuss it. Okay, Assalamu alaikum.